Well, welcome back. You're still watching the market and first trades right here on ET Now. Stepping into 45 minutes of the session, it's looking okay for the markets, but the sore point has squarely been IT on the back of Infi numbers. And the market's disappointment, not that the numbers were amiss on any front. Maybe they could have done a bit more on the margin performance because that determines profitability. On the revenue front, they're still towing the line and pretty much meeting market expectations. But it's really margins and profitability where the markets are concerned, and that's why that reversal in the trade trend for Infosys, and that's spilling over for the entire IT sector. In the meantime, the supply glut that dragged the hotel sector into a near debt trap after recession in FY09 is finally seeing a turnaround, with room rates seeing an increasing trend, the highest level in a decade actually. Avan has studied that data, joins us with her findings. Avan, what are you spotting?
Well, let's just talk about how the hospitality sector is faring as a whole, and we have seen that the sector is growing at quite a smart pace, about 15.6% in the last year. So this means that the nationwide occupancy mark has crossed the level of 65%, and yes, this is for the first time that we're seeing this kind of data since the years 2007 and 2008. So there definitely is an up move, and all of this increase in occupancies has also had a fairly positive impact when it comes to the average room rates. There has been an additional supply of something like 30,000 rooms in the branded space as a whole. Just putting some numbers into perspective for the luxury hotels. In the last 9 months ended FY17, the demand for the luxury hotel rooms on a pan-India basis has grown about 5.6% on year. Occupancies as well has seen a very strong growth rate to about 65 to 66%, and that has seen a smart recovery from the lows of 58% that it witnessed last year. And the revenue earned per average room as well, that has expanded about 4% on a year-on-year basis. Now, a lot of industry experts are talking about how ARRs are likely to continue to see an improvement. In fact, they're penciling in about 8 to 9% for the year. They see a big opportunity in the increase in the room rates because most of the fundamentals now are turning around. So the online sale as well of travel bookings, that is expected to increase at a rate of about 14.8%. But no doubt some of the key concerns continue to remain. That is high debt for most of these companies. There's mounting losses as well on account of the higher depreciation rates. GST, the fact that there were multiple tax slabs introduced made it fairly complex, and the absence of new project announcements as well, that continues to remain a setback for the hotel industry. But the road ahead, yes, there is room for growth. The steady increase in the foreign tourist arrivals is going to be a big booster. The fact that we've seen a big increase in the domestic airline traffic as well is an indication of things changing. The introduction of the e-tourist visa is a big fillip, particularly for India. Attractiveness of India as an investment destination, and the higher disposable incomes, the higher spending power, the rising employment, all of that will bode well. I just culled together some interesting data as well as to where Indians tend to travel a lot, and the hot spots continue to remain Southeast Asia primarily, like Bangkok and Singapore, and Dubai as well tops the list. You've got the Asia Pacific region, which clearly seems to be the most popular for Indians, but in terms of where they spend the most on accommodation, that's the United Kingdom. If we're talking about back home, the domestic travelers spend the most, and no surprises here in the city of Mumbai.
Yeah, nothing surprising there. I do believe that most Indians would be flocking to Bangkok, Singapore and Dubai for their holidays, and yeah, UK because of the currency, I guess.